Welcome back to Connecting Capital to Wealth here, guys. Ty Lassiter, CEO of KeyCity Capital, along with our Chief Client Officer, Stephen Patterson at KeyCity Capital. So businesses are most always started from humble beginnings. And statistics show that up to 90% of businesses fail in the first 5 years. You started from humble beginnings. We started from humble beginnings.
Absolutely.
We're past 5 years into this now and going strong.
Yeah.
Kind of share about the humble beginnings you started from.
Starting out, just, trying to find friends, family, and people that just needed a service, right, to scratch out a beginning of a financial planning practice. It's a tough road. And I think any small business owner would tell a similar story, but then that day comes where you kind of start to see that there is a light at the end of that tunnel, and that maybe this wasn't all for naught. And I think you can tell a similar story with KeyCity and how you guys got started. I mean, just you and Boone, right?
Yeah, 14 years ago. Started KeyCity, Boone and I started a partnership. It was G4 Equity at the time. Boone's my brother and one of the partners here at KeyCity Capital, but both of us had a full-time accounting gig at the time and put $25,000 of our own money into some properties. Our dad put about the same amount in, a little bit more. I think he put in $50,000 and lent it to us as a loan. And we started flipping real estate, and it seemed like we did it forever and never really made any more money. It just kind of kept going back into it. But I did that for about a 6 or 7 year period, and slowly built growth, and finally had an employer that said, "You're going to have to make a decision, son. Are you going to work here, or are you going to do your own thing?" And I wasn't going to give up my own thing at that point, so stepped away and went full time. And I went from a nice, cushy job with paid benefits to no guaranteed paycheck, no benefits, but I didn't have a job anymore. It was, whatever we could accomplish, we were going to be able to accomplish, and it was either quit or go get it. And we went and got it, but I do remember back shortly after that happened, about a year and a half, 2 years into going full time on our own and not really having we hadn't generated a form of cash flow yet. We had a couple of houses that we were lined up to sell. We had finished the renovations. We were getting ready to sell them. We had 3 more that we had started, so all of our money was tied up in those 3, and we're looking at a closing. We had a buyer lined up on both of those 2 houses, and got to the week of closing, and the lender fell through on one of them, and on the other one, so that one completely went offline. No more sell at the time. We had to go back to the market on that one. The other one, though, the lender had some complications and it slowed some stuff down. The buyer had changed jobs, I believe, during the underwriting process, so they had to do some new income verification, and so it extended closing by almost a week, or that's what the bank had said. Well, at that point, I was out of money. I had 2 kids, had a wife at home, and I remember to this day walking in on that Friday that we were supposed to close, and for the first time I told my wife, I don't know what we're going to do. We were out of groceries and had no money to do anything. And I think she got on the phone with her best friend and was just crying with her best friend. I didn't see this, but later that night we had pizza delivered to the house. Her best friend delivered pizza to the house. And so we were able to get with the buyer on that property that was supposed to close on that Friday and help facilitate getting the documents ready that they needed. And so we ended up getting closing pushed to Tuesday. It didn't go all the way to the next Friday. And I think Kara's friend had sent about 4 boxes of pizza, so it lasted until that time. And so I look back at that today, and you talk to me all the time. You've heard this story. You talk to me about pizza money, but I remember pizza money, and I've got a work ethic on my shoulder that I remember that. I know what it took to get us to that, and I know what it's taken for us to go from that to where we are today. And I'm not going back to that. And I take that same approach to every asset that we buy, every investment that KeyCity makes today. I take that same approach, that same work ethic, and make sure, we hit roadblocks all the time. You've seen plenty of roadblocks that we hit. Construction goes wrong, or
Sure.
A hurricane hits, or whatever the case may be, but it's how quickly can you change what you're doing to alter the outcome and make sure that you get back on track for what, and I relate this back to football. When I played football in high school and college, and our coaches always talk about the stem of your route, getting back on the stem of your route. You may get pushed off of your route, you may get knocked down, you may get knocked off your route, but always get back on the stem of your route, so that when I played quarterback, I knew my receivers were where they were supposed to be. When I played receiver in college, I was where my quarterback knew that I was supposed to be. So, I take my work ethic back to that and make sure we're not going back to pizza money.
For sure. Through those ups and downs, through those struggles, through the pizza money story, I mean, where do you find your courage to every day get up and say, you know what, not only can I build a better future for myself, but I can build a better future for 500 plus investors? Where's that courage come from?
Well, I think a couple of things. First, it comes from my Lord and Savior. He says that we can do all things through his strength, right? And so I get up every morning, take my kids to school every day, and we go through affirmations. I look at them, they look at me, and I am assertive, I am confident, I can do this, yeah. I am fast, I am strong, I can work hard. I will show up, I will do this. And I tell myself, and my kids tell themselves, those affirmations. And so that's just getting the day started that way. Yeah. But I have always, known that, look at Michael Jordan. Michael Jordan missed thousands of shots. I think there's a Michael Jordan quote, I don't remember off the top of my head, but he was trusted with the game-winning shot hundreds of times, and there was, I think, 13 times that he missed that game-winning shot, sure, or more. And he did it again, though. And I study successful people, successful business owners, successful professional athletes, successful executives, successful people across successful government leaders. And the one thing that always stands out is their willingness to fail. I am willing to fail faster than most people. I have taken the approach that, I've heard this was told to me before by a coach that I've had. I get coaches through everything in life. I've had coaches in football because a football coach can put you in the right place at the right time to win. A business coach can put you in the right place at the right time to be successful in business. And I had a business coach tell me one time that what other people think about you is none of your business. Yeah. So I don't worry about what other people think about me. So when I fail, I'm okay with it. I know that if I fail 9 times, I'm going to be successful in the 10th time. So my goal in life is to fail as fast as I can. How quickly can I fail 9 times so that we can get to that one success? Yeah. And I'm okay getting knocked off of my stem, but I'm going to get back on it. And so I'm going to get knocked off of it quick.
If we fail, we're going to fail forward, not fail backwards.
That's exactly right.
Yeah, and there's a huge difference between the two, no doubt. So let's rewind the clock and say 5-6 years ago. You and Boone are out there. Boone is your brother, our CFO currently for KeyCity Capital. So you and Boone are out there. You've left stable employment to say, you know what, we can create a better future for ourselves, our families, and you're putting together an equity base with friends and family and anybody that throw a few dollars in to begin this journey.
Yep.
Now contrast that with today. There's what, 50 employees across our company. We have a nationwide database, investors in almost every state in the United States, and an executive team far beyond just the 2 brothers, right? So what do you attribute, that fast growth? I mean, okay, not in a very short amount of time, you go from $2 million of capital to currently managing almost $250 million of capital. What do you say created that?
Well, so Pizza Money was about 8 years ago. That point, we really started to escalate, and over the next 2 years, as we sold those 5 properties that we had at that time, that was about our 18th deal. It was about 13 through 18. We started gaining some traction. We had family and friends that wanted to start getting involved, wanted to start partnering with us. And so we took on, over the next 2 years, we took on a number of joint venture partners.
Yep.
And so each individual investor was a joint venture partner. We did deals with them and them alone, and we did other deals and deals alone with the next partner, and so on and so forth. And that went on for about 2 years. And then in late 2017, we met another would-be business partner. But in the year of 2017, we really had started taking traction. 2016, we really started growing and building. By 2017, we were starting to see some success, and starting to have a little bit of discretionary capital at that point. And at that point, the minute we had discretionary capital, I didn't go out and buy a car. I didn't go out and start buying watches. I didn't go out and start buying lavish things. I still lived I was actually renting at that time. I was renting, putting all of our money into investments that we could flip. Your personal home is not an investment. Most people think your personal home is an investment. It's not, because that money's sitting there like it's in a savings account. Yeah, maybe it may grow faster in appreciation than a savings account, but you can't use that money. Yeah. You sell your house, you got to take that money and go buy a new house.
Capital that's locked up.
It is. And so we started gaining traction, and in 2017 we met a would-be new partner, and he introduced us to our still today partner, Lee Archer. So guys, check us out, KeyCityCapital.com/podcast or KeyCityCapital.com. That's KeyCityCapital.com. And you can see the executive team that Steven's talking about. You can see some of our team on there. But anyways, we started investing in ourselves when we had that discretionary money instead of buying things. We invested in coaches to help. So we had gotten to where we were, but what had gotten us to where we were wasn't going to get us to where we were trying to go.
Right.
And I knew that we needed somebody who had, we started looking who has gotten to where we're trying to go. I had goals with where we were going to take our company. And so we started looking, actually got involved with Robert Kiyosaki's Rich Dad, Poor Dad, had found a couple of coaches within that organization that helped set our business to the next level, and then we met that level and we moved on from there, and now we've started interviewing executive coaches that you actually connected us to that are from financial marketing from Wall Street. So I think the willingness to know I am not, or I don't want to be the smartest person in the room. I want to find talent around me, or find somebody who has accomplished what we're trying to accomplish, maybe in a different industry or something, but they have accomplished some of the similar goals that we are, and I invest in them. And that was one of the most important things that we did that helped take us to next level, helped kind of redirect our business, helped put things in place in our business that we needed. But then the most important thing that I think that we were willing to do, we have, and you were actually a part of this, myself and Boone and Lee, we were not the highest paid people in our organization until this year. We were looking for talent to put around us, and we were willing to put money on that talent so that talent can do what they do best and allow us to focus on what we do best. Finding assets. Lee is amazing at finding assets. Yep. Boone's amazing at making sure that the capital is in place, deployed properly, and accounted for properly. He knows, Boone can remember the license plate on a car that he saw 3 days ago. Like, there's just a unique ability for Boone to retain in his mind financial data as he works. And I'm good at it, but I'm also good at managing, what is the best capital structure to deploy in a given asset at a given time. And then I'm also really good at marketing and making sure that our brand and our opportunities are out there and seen for other people to take advantage of and to give in, and for us to create an opportunity for the investors that come in today, the nearly 550 that we have now.
Well, I think you bring up an interesting point. A team is only as good as the players on that team.
That's exactly right.
I had somebody one time, I saw a T-shirt, you can't win the Kentucky Derby on a mule, right? So, with that thought, When you're evaluating talent, when you're looking for team members to come on KeyCity Capital's, executive team, or just on our team as a whole, maybe on our construction team, maybe property management, maybe accounting, the many roles that we have. What are some things you're looking for in team members?
Well, I think there's a couple of things. I'm always looking for somebody who can think outside of the box. They're not bringing me a resume and saying, this is what I can do, and when you tell me how to do this and what to do this with, and I can go out and do it.
Self-starters.
Right. I'm looking for somebody who, you put a problem in front of them and they're going to solve that problem. They may not solve it the way that I do, but they're going to solve that problem. Yep. And then I am looking for somebody who solves problems in a vein that is not problems that I already solve very well. I'm looking for somebody like yourself, solving the capital problem. So I'm going out and we're doing marketing and we're generating leads, and we've got leads coming in faster than we ever have. And I'm pretty good at raising capital, but that's not my highest and best use. I can have a capital conversation with somebody. It's not my highest and best use. You do that amazingly well. Yeah. And I was willing to put you in place and turn you loose. I think you listened to our product pitch 3 or 4 times and you got after it. And then you would come to me and you say, hey, here's a problem I'm facing. These are the ways that I'm thinking that I solve it. Do you see something different here? Right. And I'll always give input, but that's what you do well. And then, we've brought in a general counsel, chief compliance officer, because dealing with how our investment offerings are structured and the compliance thereof is not my highest and best use. It wasn't anybody in our organization's highest and best use at the time. And so we spent a lot of money on that attorney that we brought in and put on our team, and he has taken us to the next level. And so, I think that is what I'm looking for, is somebody that can think outside the box a little bit to solve problems. I don't have to say, here's the problem that you're solving and here's exactly how you're going to solve it. The next thing I'm looking for, though, is grit. I'm looking for somebody that is willing to hit that problem and get knocked down, get back up and hit that problem again and get knocked down again, and they're going to do it a third time.
Nobody cares. Work harder.
Yeah, exactly. And so oftentimes, you find that in athletes, but you find that in people that have faced their pizza money situation.
Sure.
You find that a lot in somebody that has faced adversity. So I'm looking for adversity. What kind of adversity has this person faced?
No, for sure. Mike Tyson says it best, right? Everybody's got a plan until they get hit. And over the years, you've taken some hits, but you've kept on moving. And with that thought, KeyCity Capital's grown tremendously over the last 5 to 6 years. We're currently managing $250 million in investor capital. We're managing just over $600 million in real estate assets. Yep. On our way to $1 billion in short order. But tell me where KeyCity's going, and tell me, your vision for the future.
Yeah. So, I started out, I mentioned earlier, in accounting. I got a master's in accounting. But I'd always focused on, and I'd always wanted to be involved in private equity and owning businesses and owning assets. And we've talked about that in an earlier session. You and I talked about owning physical assets, but specifically owning those, because not just investing in a stock, but owning a physical asset, a business or a real estate, because I can determine the outcome. Maybe there's a business opportunity here and there's a huge growth potential, but the solopreneur that currently owns it doesn't know how to scale into a new market. Well, I've scaled into dozens and hundreds of markets across the United States. And so now I have an attribute that I can add to that business owner's ability to grow. Yep. And I can help them. We can invest in that business, partner with that, and create growth. And so one of the places that KeyCity is growing this year, as we grow and bring on investor capital, we've by and large stayed in real estate, but we've had a construction company since we started. We've had a property management company for the last 5 years. We're now a partner in a title company, so we own 50% of a title company. We own 50% of an insurance company. So we're vertically integrated in real estate. So the next thing that we're going to do is we're going to take those other 4 businesses and we're going to start growing those with investor capital. Yep. So we're going to give our investors an opportunity to start getting involved in some of the other businesses that we're involved in. And as we do that, we're going to create greater diversification for our investors. But with that comes some additional registration requirements with the SEC. We'll create a hedge fund that you and I talk about a lot. And that's an opportunity for investors to come in, and instead of being involved in just this private equity that buys businesses or just this private equity fund that buys real estate. They can do both. They can also be involved in the financial market to some extent. With that brings on additional financial management. So we're going to be able to manage our clients' traditional stock, bonds, and mutual funds portfolios. We're going to be able to manage their private equity investments across all of our private equity platforms. So an investor that comes in that has $1, $3, $5, $10, or even $50 million, they can deploy that across a multitude of avenues and diversify within KeyCity. They can be in stocks, bonds, and mutual funds that we manage. They can be in our real estate. They can be in our OpCo funds that is buying businesses, and all at the same time. Nice. They can also be in a little bit of our debt business that where we're doing lending and asset-backed lending, where there's not upside growth, but there is an interest or a distribution that is kind of set and locked in stone. 6%. Somebody invests $100,000 in real estate-backed lending. We have a first position loan, and they're going to get 6% throughout a 1 or 2 year capital commitment.
So you see KeyCity Capital evolving into a one-stop shop for all things financially related to a client. Would that be accurate?
That's very accurate. Very, very accurate.
So, part of that is taking a risk, right? I mean, You didn't get to where you are without calculated risk. Yeah. And you take, and you've taken a risk on people. You took a risk on me. You've taken a risk on adding to the partnership over the time. But, with that comes a decision set, right?
Yeah.
Talk to us about how, when you're taking risk, how you're calculating a decision set to say this is a good opportunity, or no, we're going to wave off. We're going to go a different direction.
That's a good question. So I'm not a gambling guy. I enjoy going to Vegas because I like the food and I like the golf and I like the entertainment.
Yes.
But I'm not a gambler because I can't take a calculated risk in gambling.
That's right.
I can play spades and I can count a deck of cards in spades and I can do very well. But once you put 3, 4, 5 decks of cards, 7 decks of cards in a set of 21 blackjack, I'm not counting anymore, right?
Sure.
But I take calculated risk, and the way that I do that is I look at the optimum potential. If I take this risk, what is the optimum potential of happening, and what is the financial downfall within that risk? So with you, that's a salary. Okay, so now we can take 3, 6, or 12 months. I know exactly what if you fall flat on your face, which I could see going into it. I knew you could think outside the box. We talked about that. You were a college athlete. Okay, you've got some grit there. You had also experienced your own pizza money situation. You've definitely got grit there. I had a high likelihood of success with you. But if for some reason this was not your vein, well, I know my financial downfall, what I'm going to pay.
Yep.
Okay, but my upside potential is, well, I've got thousands of leads coming in and people that are wanting to invest with us. But I am trying to manage where KeyCity is growing 5 years from now to make sure that as new investors come in, that we have places for them to grow with this organization for the next 2, 3, 4 decades. And even when we move this business on to the next partners in line that are going to take the business over, I want it set up for that. So I'm focusing on that. So that was a risk that I'm willing to pay you to say, okay, you're going to manage this lead flow that's coming in. And what does that look like? And so my decision matrix, when I look at any decision that I'm making, is what's the best potential outcome? What's the worst potential outcome? But what's the most likely outcome? And I weigh the financial loss across all of those. If I'm willing to live with the worst potential outcome, everything above that's gravy. I can make that decision in 10 seconds.
Absolutely.
I can look at it. I can look at just about anything, and in about 10 seconds, I can tell you the 3 potential outcomes, and I can make a yes or no decision.
And I get to see this on the daily. Our clients get to experience it in short doses. But part of growing is spending.
Yep.
And one of the things that I've often heard you reference to our business, and as evidenced, just here today, it takes something to be here, right?
It does.
But you have a willingness to spend to grow our business and to produce a better outcome for our investors. Talk to us about that a little bit.
Yeah, so our investors' dollars are going to go to a physical asset. Mm-hmm. When that physical asset performs, at some point we're going to get paid. So our investors make an investment, and you can check out our investments at KeyCityCapital.com, KeyCityCapital.com. You can actually get on Steven's calendar there. You can ask whatever questions you have of him. But our investors, when they invest, it goes into a physical asset. They're going to get a preferred rate of return or a hurdle rate. And when they invest, they have to get that hurdle rate and their initial investment back. And then once it goes above that, there's a split. They get 80% and we get 20%. So now we're making money. Okay. And then we've got other fees and things like that that are built into the acquisition of an asset. So that asset's going to pay us an acquisition fee. So that money is what drives our opportunity moving forward.
Yep.
And the faster that we can get to success with that business and with that asset that we're buying, the more opportunities that we're going to have. So when we started our business, we started it with all our own money. Boone and I started it with just our own money. And so we were able to build a little bit of a nest egg so that we could start taking chances on marketing, on the dinner events that we do today. And so I am always willing to try a new marketing opportunity, to find new opportunity to work with great new people. The 550 investors that we work with, I know a large portion of them. You know almost all of them. And on the daily and monthly, we're speaking to those. A lot of them come to our dinner events. We were at our office in Naples last week, or 2 weeks ago, had a dinner event down there. We had, 65 people at that dinner event? And 20 of them were current clients, current investors. They're coming in to talk to us. I am always willing to say, hey, here's a new opportunity that I think we can find another 20 new partners to work with. Let's try this. Well, we'll try it once. I know the potential downside. Let's say it's going to cost us $15,000 to do this one thing. Great, $15,000. If we get one new client from that, in the next 3 years, that $15,000 was going to have been worth it. So how quickly can I multiply that over? Well, this $15,000 didn't work. I'm willing to take that risk. I'm willing to accept that if this one doesn't work, I'll cut it off after the first try if we don't find an investor.
No, that's great. And to be clear, there are investor dollars and there are marketing dollars. That is not the same pool of money.
No, not at all, not at all. Yeah, we have, KeyCity Capital, like I mentioned, when the assets perform, the investors come in, they're investing in a fund. That fund is buying a piece of property. That fund is buying multiple pieces of real estate. We focus on cash flowing rental real estate, apartments, things like that. That's where the investor dollars are going. When those assets perform and we make our money, and oh, by the way, I'm also invested alongside our investors in those assets. When we're making money, we're going to go out and spend marketing dollars to help grow and help bring in additional new investors. Because as we bring in more investors, we get access to more opportunities. COVID was great for us because during COVID, we had that $100 million capital placement. We were one of 19 private companies to have a 9-figure capital placement. And with that brought a lot of publicity. We had a lot of new clients come in around that time that started to hear about us that hadn't heard about us before. We went from a regional firm that had investor dollars in Texas and in Florida to a nationwide firm. We now have investors in almost all 50 states.
And that growth was explosive. Thank you for joining us on Connecting Capital to Wealth. My name is Stephen Patterson. I am the Chief Client Officer for KeyCity Capital. Please take a look at our website, visit us, KeyCityCapital.com. Until we see you next time.
Look forward to connecting with you guys. That's KeyCityCapital.com, KeyCityCapital.com. Stephen, great talking to you today. Ty, we'll see you guys next time.